Now, let me explain the investing triangle. So now when we talk about common investments, we have stocks, we have options. Some people, they invest in like real estate, but real estate for beginners, I would say the entry level is a little bit high because you need larger capital. But if you're talking about stocks and options and crypto, then you don't need that much capital. So these three major investment tools right now, I would say they're the most popular right now. When crypto wasn't out yet, I would say definitely stocks and options were the most common investments. Okay, so now this is the investing triangle. So if you don't have this idea yet in your mind, basically all the investments that in this world can be can you can use all you can if you have this triangle, then you can handle most of the investments in the world. So for example, if you know how to do technical analysis, you can do stock, you can do crypto, you can do even forex, which I don't really like, but even forex, right? If you know how to do valuation skills, fundamental analysis, then 100% you can do stocks, or maybe you can even do real estate. What's the intrinsic value of the house, then you can buy into the house when it's cheap, right? Then if you have the mindset of investing, which I do talk about in my book, then basically you can invest in anything in the world. Investing in the world, it only follows one simple concept. Okay, I'll talk about it in my book. I won't talk about it today. All right, so basically you have stocks, you have your options, then you have your cryptocurrency. Now, the learning path for this, and for most people, if you are a beginner, most people think that I'm going to go and learn TA. I'm going to try to catch the bottom, and then I'm going to try to sell at the top, and then I'm going to try to catch the bottom again, and then I'm going to sell at the top, right? So that's if you are a beginner, that's probably what you have in your mind right now or before, right? Then if you're lucky, right? If you're lucky, then you go learn about fundamental analysis. You go learn about valuation skills from the greatest investor, Warren Buffett, or even Peter Lynch or Michael Berry, or Mary Buffett, right? So then you have how to evaluate companies and know if this is a good company and when to buy it. If do you see the intrinsic value growth in that company? And then the last part is the mindset. Once you have this mindset, you can literally make money on everything, on anything, because you truly understand what investing is. Okay, so let me just give you a brief example of the three pillars of investing. So just for example, if you want to do like a really large investment, right, and you want to, let's say if you want to do property, land, real estate, right, then you have to know about valuation. You have to know about what is this piece of land worth? Do you see the true value of the land? Do you see the value of the house, right? When you want to do real estate investment, most people, if they do it the lazy way, they buy a house, wait for 5 or 10 years, wait for the value appreciation, and then they flip the house, sell the house, right? So that's what most people do. Now, if you're an investor, right, you see, oh, okay, if this house is in a really good corner, right, then you put in some money, you modify the house and you flip it, and you try to sell it for a more expensive price. So that's also called investing. You buy something cheap and then you flip it and you sell something high. Right now, what is the mindset? So now, if you don't have the mindset about what investing means, then you can, if you just buy a house, just doing it based on pure valuation, then you can actually, the value can, depreciate. Then you can also, if you can actually encounter the housing bubble, right? And then, you can lose a lot of money. But with the help of the mindset, then what will happen is, like, for example, right, real estate investing or larger investments, what you really only want is two things. You either want value appreciation, you either want the house, the business, or your property to grow in the intrinsic value, not just the price. The intrinsic value, meaning that, if you buy a land, like, far away right now, you're hoping that more people will go to that place. And then when there's more demand, it pushes the value of that item to go up, right? So you're either looking for value appreciation, or you're buying a house and refurbishing it and then renting it out to gain cash flow. So investing is only two things. You either want value appreciation on something, which is intrinsic value growth, or you want cash flow like dividends, or you want like passive income. If if investing is not one of those two things, then I probably wouldn't say it's called investing. It's more into the trading, gambling side, which I wouldn't say is wrong, but you just need to know what you're doing, right? So now what about stocks, right? So with stocks, you can use the valuation skills on stocks. So you know how to do intrinsic value calculation. You know what is the fair value of a company. You know if this company make money, does this company have a lot of debt, or does this company go bankrupt? Right. So a lot of people don't know about valuation. Look at the 2000 dot-com bubble. Everyone knew, what everyone only knew was technical analysis. They were seeing, oh, I see this uptrend. This will continue to go up. Same with we had a great recovery in cryptocurrency recently, but when people didn't really think about the risk in May when the cryptocurrency drop happened, they were assuming that the uptrend will continue to go, and then maybe someone didn't stop loss, right? Maybe. So with the valuation and technical analysis, you can do stocks already. Now with cryptocurrency, then you can, because there's no financial report for you to read, so therefore you need the mindset and the technical analysis to help you invest in cryptocurrency. So just for example, right, we know Bitcoin and Ethereum, the two largest cryptocurrencies right now in the world. If you want to enter Bitcoin, if you want to enter Ethereum, then you need your technical analysis skills to help you try to catch the bottom when a drop happens, right? And then you need to understand the value appreciation of Ethereum or the value appreciation of Bitcoin. So what contributes value to Bitcoin? The scarcity, the uniqueness of Bitcoin, being the first cryptocurrency, or Ethereum because of the Ethereum chain, everything, the metaverse, right now is still the majority, even though Solana ADA has come out. But right now, everything is still built on the Ethereum chain. So Ethereum, it has more demand, so that contributes value to Ethereum. So basically, you have that mindset, you have the technical analysis skills, then you can invest in cryptocurrency already. You just buy Ethereum, you put into a savings account, Ethereum savings account, get 5% interest, every week. Then you don't touch it, you make money. It's that simple. So now options is if you have the combination of all three skills, you have valuation skills, you have the mindset, you have the technical analysis skills, you do a long call option, or you do a long put option, do a sell call, sell put option, then you truly understand when you are doing, right? So let's get into stocks and crypto then. So we'll help you focus more on stock and crypto. Now, with this course, right, if you're like a really new beginner and you learn about technical analysis, you haven't really learned about valuation or mindset, you can do stocks already and options, because with options, with catching the bottom, you can start making money already. With stocks, even if you don't know how to do valuation, right, buy the S&P 500, wait for a drop, you catch the bottom with the technical analysis that I'm about to teach you today, you still make money. With cryptocurrency, you wait for a drop, you try to catch a bottom with the technical analysis on Ethereum or Bitcoin. Don't buy anything else, because if you want to be safe, right, buy the major ones, and then you wait for a drop, you catch the bottom, you still make money. So with just only technical analysis, you can already start to make money, but it's just this piece of puzzle down here. So I just want you to have this clarity first before we dive into technical analysis. And the reason why technical analysis is sometimes it's complicated and so confusing is because it's not 100%, right? But with this skill that I'm about to teach you, its accuracy is about 80%, which is really good. I've been using it with options already, and it's making me a lot of money. So why catch the bottom? Why do you need to catch the bottom? So we have to learn from the greatest investor right now in our time. There's in other times there's Peter Lynch, there's Benjamin Graham, there are other investors, right? So Warren Buffett, being the most famous investor in the world right now, he said that be fearful when others are greedy, and greedy only when others are fearful. So what does this mean? So if you think about investing or the stock trend or the price movement, what do you usually see? What usually happens is when something good comes out, right? People are skeptical about it, but when someone who understands the intrinsic value of that Bitcoin or Ethereum or Solana, right, they buy into it, And then when the common investors, when they see, oh wow, this is going up, I'm gonna go and buy into it, and then this will push the price up more. And then lastly, the most skeptical people that who fear of missing out, right? They will be the last people buying into that item, and they don't even know what they're buying, and then that's going to push the price all the way up to the sky. We've seen it in Apple stocks and Tesla stock and cryptocurrency stock. The May drop right there. So when people are greedy, right, that's when we need to be smart and we need to be fearful. Now, what would happen when the stock market crashes or cryptocurrency crashes, right? So think about the 2000 the dot-com bubble, right? Microsoft and Amazon, their financial reports were great. If you had bought it at the bottom right there, you made a lot of money. Think about the 2008 housing bubble when real estate housing prices was on the floor. You could have just went out there and bought 10 houses. You would be a billionaire right now, right? So that's why you should be greedy only when people are super afraid, because valuable items, when they are super duper cheap, you want to buy them. So that's why we need to learn to try to catch the bottom. Also, opportunities, Warren Buffett said, opportunities come infrequently. When it rains gold, put out the bucket, not the thimble. So what does it mean? So if you were if you were a lucky man, during the COVID crash last year, or during the 2000 dot-com bubble, housing bubble, right? If you're like the guy who doesn't touch investing, and then you see this great opportunity come right now when the price was on the floor, and you said to yourself, I have no idea about investing, so I'm going to invest in only $1,000 in the S&P 500. Right now, you would look like an idiot. Because why? Because when the chance came, you didn't grab the chance. You were being fearful, just like everyone else. Okay, but if you had like saved up 100K or something, right? You bought into the S&P 500 last year during the COVID crash, or during 2000 bubble, housing bubble, right? Just putting like $10,000. Right now, you'll be still making a lot of money, right? So it's when we talk about stock investing or crypto investing, it's most of the time, if you see something that's valuable, most of the time you kind of want to buy it when it's cheap. Okay, now this could be different from trend investing. So your mind has to be clear. Okay, when we talk about catching the bottom or buying the dip, you have to find something that is valuable. If that item is not valuable, which means there is no one using the item, you don't see the value appreciation in the future, then you're just going to lose your money. Okay, you're just going to lose your money. So for this is called contrarian investing. You buy the dip only on valuable items, such as maybe Ethereum, maybe the S&P 500, maybe Apple stock, or maybe Microsoft stocks. Okay, you have to see the value, wait for a drop, buy into it. It will always go back up. It will always go back up. Okay. So now investing in the stock market or the cryptocurrency market, I mean, if you do the contrarian way, which actually Ray Dalio and Howard Marks, these great investors, as they explain, they say that investing the contrarian way or the value investing way is the only thing in the world that can give you a low risk plus high return. And you'll be thinking, what the hell? Most people who don't understand investing will be thinking, what the hell are you talking about, right? Because let me show you. Because now this is a real example. This is one of my students. He bought this stock during the COVID crash. So he was he was new. So he bought only 10 shares SPG. So it's a property company. So he bought 10 shares, and then he just waited and waited and waited. He didn't touch anything. And then after a year, he made 139% on pure stocks, not even options, just 10 shares of SPG. And why was that? It was like, because there was big discount, right? So I'll show you the cost later. And then he said, I see this is a good value, and I see what's going to happen after COVID. People are going to go back, things are going to recover, right? So after a year, he made, that's what he made. He made 54 US dollars, just with 10 shares. So now his initial capital was only $539. And right now, because plus this gain right here, it had doubled already. It had completely doubled. Now imagine if he knew how to catch the bottom, if he knew how to do better valuation, then he would bought 100 shares. And then he would make more money, right? But he was scared. He didn't know anything about valuation at the time. He didn't know anything about technical analysis. So he was basically testing it. So this is this is what Warren Buffett said. When the market rains gold, you should not catch it with a thimble. Use a bucket. So he originally paid, what he paid was $52 per share, and right now, that one piece of share has doubled, more than doubled, to $125 right now. So this is why when something valuable is cheap, you spend less capital, right? You spend less capital, but your returns can actually be higher. Okay, so now this is why Warren Buffett, all the great investors in the world right now, they're all talking about value investing. You see the value of something, wait for a drop, buy into it, and forget about it, right? Okay. So now these are some real trades. This is one of the students' trade. This is also good for short-term trading. So if you know how to catch the bottom, right? So this student, he learned this technical analysis thing. He bought 50 shares in Microsoft, held it for 2 weeks. Now the return isn't probably really, it's like around 9 or 10%. Probably isn't really good, but he held it for 14 days. He knew how to catch the bottom. So he was doing some short-term trading. He was super afraid to lose money. So he closed it after 14 days, but he still made $1,000 in just 14 days by catching the bottom, and then going up. He was afraid, so he closed it right. Now even with this Vanguard one, you catch the bottom. He only held it for 3 days. But he bet heavily. Well, not even betting. It's invested heavily into the Vanguard. This is S&P 500, and it has the 500 strongest companies in the world for only 3 days. He bet heavily, you based on pure TA, then he made money. He made like 3 days, $938. So, and I said, man, you closed it too fast. Why didn't you hold on to it for a longer time, right? But then he's saying, I spent so much money right here, so that's a cost. I'm super afraid of losing money. So I'm like, okay, fine. As long as you make money, as long as you don't lose money, then it's fine. Okay, so you can see the importance of trying to catch the bottom and not investing in between the drops. You want to try to catch the bottom, and when the bottom comes, right, you invest in super valuable companies. You go in big, and you don't worry about it, and then you make money. All right, so now how can you use the technical analysis if you don't know about valuation, right? If you don't know how to evaluate stocks, you can still use technical analysis to catch the bottom on major indexes, right? So if you don't know about stocks, right? We have the 3 major indexes in the US market. You have the NASDAQ 100, which is QQQ. Now this one it's an ETF, and ETF's 100 companies inside this pack, right? So you don't really need to worry about one company going down. Now the NASDAQ 100 is very, very it takes out all the financial companies inside. So then based on the capital of the ETF, most of them are major tech stocks such as Google, Amazon, Facebook, Apple, and Microsoft. And right now Tesla is inside as well. So if you just buy these indexes and you go look at the chart, they are always going up. And why are they always going up is because if one company goes down, it gets kicked out of this ETF, and then good companies such as or market cap, large market cap companies such as Tesla gets added into this ETF, and then it pushes up the price up more. All right, so now the QQ, most common people will say it's about the tech stock ETF. It's a low cost index fund, and it automatically changes the stocks inside, so you don't really need to worry about it. it's not like an auto changing free auto changing stock manager for you. So you pay high fees for managing your portfolio. S&P 500, this one, SPY, that's S&P 500, and it has 500 different companies inside. So it's very, very safe. If you look at the chart, when it goes back down, it always goes back up, goes back down, it always go back up, right? So same with the Dow Jones Industrial Average. This is a DIA. This one has only 30 companies inside. It doesn't have all the major tech stocks inside. So if you look at these three major indexes and you use either a call option or a put option, or just buy a long call option, right? And then you wait for a drop, which is happening right now. The stock market is kind of crashing due to this new COVID variant right now. Then when you see the market crash and you use TA to catch the bottom with either a few stocks or your call option, it will always go back up, and then you make money. It's as simple as that. Okay, so now what are the 5 golden indicators? So now, so number 1, the support and resistance, the general consensus. So let me explain about support and resistance more a little in advance. So when you see a stock price hovering around a certain price, this means that most people, buyers are, when what forms a support means that buyers are okay, most buyers are okay to buy this certain stock at this price, right? So this means that it will form a support. So let's say, if you use an iPhone, for example, when if an iPhone's price drops to $100, or people are gonna, oh man, this is good, and then they'll keep on buying. So and then so that's like the buyer and seller like agreed price right there. So that forms the support and resistance. Now, okay, so now, but if you know about valuation, why is support and resistance important? Is because let's say if you know how to do valuation, if you evaluate your company that's worth maybe $100, right? But the stock price can actually still go down to $90, $80, $50, $60, $50, right? So you have to know when and where is the possible bottom. Okay, so this is why support and resistance is important, despite if you know how to do valuation. Okay, so this is what I was talking about. So let's say if you Visa right now, let's say if you know how to do the intrinsic value calculation, you can see that the price right now is way below the intrinsic value, but you don't know when it's going to stop dropping. Right? So therefore, you have to use your technical analysis skills to try to find the support and try to find the resistance level to enter big. Okay, so let's do some hands-on. Now I'll show you guys how to draw the support and resistance. So first of all, go to TradingView. I actually don't know how many of you know TradingView already. All right, so go to TradingView. If you don't know about TradingView, click on the link below, and then I'll show you how to draw the support and resistance step by step. And I think it's the most useful way. You come into this TradingView site, right? So you click on here, you log in with your Facebook, or you log in with your Google account. Then, so you log in that first. Once you've done that, there will be a lot of stuff on the right-hand side right here. What I want you to do is you want to click on clear list. Okay, I want you to clear everything first. So click on clear list. It will clear all the symbols for you. Okay. Now, once you've done that, you go to chart over here on the top left-hand corner. You go to chart. Your watch list should be empty right now, and then you want to click on this symbol over here, and you want to choose candles right here. If you don't know how to do, if you see like lines and bars, I want to use candlesticks. Okay, right here. Okay, Jeffrey, you can stop me anytime, because if I'm going too fast, you can stop anytime. Go to candles. Okay, so now for other people, we'll start from the very, very basics. So we will look at the 3 major US stock indexes. Okay, cool. All right, so click on this symbol right here with the plus symbol. We want to look at QQQ. We also want to look at the S&P 500. And then we also want to look at the Dow Jones Industrial Average. Now, these three major ETFs or major indexes, if you, okay, I'm going to clear all my drawings first. So I'm going to remove all the drawings and I'm going to remove all the indicators. So if you go ahead and look at the S&P 500, you pull up the chart, you go here, you click on all, you can see this is the 2000 dot-com bubble crash, went back up and went to the 2008 housing bubble crash, went back up all the way here. 2008, that was a trade, or 19, that was the trade war going on with China, a few corrections. And then this was the COVID crash in 2020. And right now, there's no big correction yet, but some people are saying that it's coming, but we don't really know, right? So you can see that if you had bought into, a one share of the S&P 500, you would make a lot of money right now. Same with the NASDAQ 100, which is the QQQ. You can see dot-com bubble, it crashed all the way to the bottom right here. Housing bubble crash, and it has made a lot of percentage right now. So if you want to see how much percentage it has made, right, click on the toggle percentage right here. So if you didn't know anything about investing, you invested at the bottom of the 2000 the housing bubble, you had made 1,321% just on the NASDAQ 100, just by not doing anything, by not looking at valuation, not looking at financial support, by just buying this index fund, right? Same with the S&P 500. If you had bought it during this big drop right here since 2009, bought at the bottom, you will make 400% just by not doing anything. Same with Dow Jones. You would still made 327%, right? So we can see that using an index fund as a beginner, if you don't know how to do valuation skills and all that, using an index fund with options or with technical analysis, it's very useful and simple and easy. Okay, so now let's go ahead and look at the let's just use the S&P 500 and the QQQ. So if you look at this chart, right, we want to look at the 1 year chart. Okay, so look at the 1 year chart. I'll explain why. Because with the 1 year chart, you kind of you don't really, with the stock market, with most good companies, the intrinsic value will continue to grow. You don't really need to worry about it too much. Unlike crypto, which is heavily affected by the news, which you have to really understand the market to make a lot of money. With the stock market, you basically let the companies grow by themselves. You don't have to worry too much. Okay, you don't have to worry too much. So now, how do you draw a support and resistance line? There are two types of support and resistance. There is the horizontal support and the diagonal support. Okay, so basically there are two ways. So the horizontal support is easier. You basically go here and click on the horizontal line. You find where prices have hovered before. So just for example, right, when you see this correction right here, you're trying to guess where the bottom is. You kind of move this line around. You kind of see, oh, there could be like a weak support right here. A weak support means that there's only one dot or 1 point, right? But now if you move this line down here, you can see how many lines or dots is connecting. There's one dot right here. So there's one rebound, 2 rebounds, and 3 rebounds right here. So now this is a stronger support compared to this one single support right here. Okay, so that's a support line, right? Now also when you see this drop again, you can see, oh, this price hovered around, I'm going to change it back, not using the percentage. So you can see this price when it heads back here, it's connecting 1, 2, 3, 4 lines. So this is a possible low point, possible bottom, right? Okay, so now, that's a support. That's a support. You can also look at individual stocks if you're interested in, for example, if you like Microsoft, Apple, Tesla, Amazon, Facebook, and all that stuff. You can try to draw support, try to find the horizontal support first. This is the most easiest one and most common one that people use. Yet it's super duper powerful. Now with this line, right, you can actually you can move it around. you can see, oh, why does this price hover around here? Why did this price, when the correction came, why did this price hover around here? Because it was kind of close to this, right? Also, same if you move it to the top right here. This is called the resistance. Okay, everyone's done. Cool, cool. All right, so the horizontal support is very, very useful. Same with the QQQ, right? So you can see here there was a horizontal support right here. Now, what would happen is when prices break above this resistance, now this is called the resistance, and drops again, there's a high chance for the stock price to rebound when it touches the previous resistance right here. So the resistance becomes the support. And then what would happen is when the stock price could come back down to here and hover around here, right? So if you look at this again, when the price reaches the top here, hovered and came back down, okay? Hovered and came back down. So yeah, so same over here. Price came back down, touched the previous low right here, and then went back up. Okay, so this is called the horizontal support. Okay, I think this is very easy. Now let's talk about the diagonal support. Now the diagonal support. So I'm going to clear my drawings. Remove drawing. Okay, now the way to do a diagonal support is you have to find the diagonal angle first. So what you want to do is click on this, click on trend line over here. You want to connect the dots. Okay, so now a diagonal support, there could be multiple diagonal supports. Okay, so first, now this is, you have to go and test it out. So let's say, for example, the QQQ, you're trying to, what I'm trying to do is I'm trying to connect one dot and two dots right here. Okay, sometimes it's not perfect. And then what you want to do is you want to right click on it, you want to clone it, because then it will give you the same angle. So then you want to move this around and see if you can actually find a strong support which has the correct angle. So I'll move it to this bottom right here, but then I don't really see a strong angle, right? I don't see any dots connecting, so I'm going to move it back up a little bit right here. Now this with the same angle, you can see that it's connecting, how many dots connecting, almost one or two dots right here. Now, what if I move it closer to here? It's not clear, right? But if it's not clear, it's not clear. Okay, if it's not clear, it's not clear. But keep on moving it, moving it, moving it. Okay, so I do kind of see I would say probably this is a resistance right here. You can see when the price touches this, it kind of rebounds, right? So this means that this angle is not the perfect angle. Okay, it means it's not the best angle. So then you will need to go and find a different angle. So I'm going to remove that. I'm going to try the other way around. I'm going to try to start from the bottom right here. Okay, so I'm going to try to connect these dots right here. Oh, okay, so I kind of do see, 1, 2, 3, 4, 5 dots right here. Then you click on clone and then move this around and you can see, wow, okay, wow, you can see this is I would say it's a very clear trend. 1, 2, 3, 4, 5, 6 dots right here. Therefore, before this correction, I actually got out of the market because I did see this. I saw this is like touching this strong resistance. So before the correction, I got out of the market and bought something cheap. Okay, so everyone go and practice the diagonal support. You want to test it out. The diagonal support it's not as clear as the horizontal one. You want to test it out. You want to find the correct angle, clone it, and see if you can find a different diagonal support. Okay, so with this help of the diagonal support and the horizontal support, let's just try this again. So you move this horizontal support line, you're trying to move it up. And when you see this horizontal support crossing over with the diagonal support, like right here, that's the best time for you to buy big. Okay, so that's a very good time for you to buy big. So you can see there's a price hovering right here, right? And then you clone it and you move it up and you see, wow, this is another perfect time for you to buy. Use your options on the NASDAQ 100, or you use your call options, right, to use it right here. This is, I still remember this one. This one I just bought like 1 or 2 call options and a few shares. Actually, I actually bought like 100 shares or something. So with the combination of the diagonal support and the horizontal support, then you can actually, bet more heavily into the stock market, but only use it on valuable items. If you don't use it on valuable items, it can't save you. Okay. So same here. Let's go check out the S&P 500. Okay, so let's kind of have a quick look, see if there's a clear trend. So I'm touching this one. So maybe this is a good angle, just maybe. I'm gonna try it, clone it. And okay, it's kind of, okay, it's not too bad. Excuse me, not too bad. Not very clear, but it's good enough, right? Good enough. So it's following this trend line over here, moving this horizontal support, nothing. Okay, so this one was a good one right here. You can see this is a clear one. That's a very clear one when they cross over each other, boosted up in October. Okay, so now this is now we're going to just try one more with the Dow Jones. The Dow Jones is a little bit different. The horizontal one is not very clear. So I'm just going to try that. Clone it. Let's see. Maybe this is a good one, just maybe. And then we're going to try to use the horizontal line. But there's one right here. There's one right here. Horizontal support, previous high. And maybe there's one coming soon. Now, I'm just going to use Ethereum because I know most of you are crypto traders. So I'm going to use it on Ethereum and see if we can find a trend on Ethereum. I'll talk about the Fibonacci later, which is super duper useful. Okay, so Ethereum. Okay, obviously there is a horizontal support, right? Very obvious. Previous high, 1 time, 2 times, 3 times, hovering right here. So this explains why the price is hovering right here. And you can, if you are like a crypto trader, you can definitely invest in some Ethereum right now. Okay, so now when we're trying to catch the bottom, right, we want to find the top first. So let's have a look and see if there is a clear trend. Let's see, maybe.
Sorry, Ken, I got a question. Just now you mentioned that when you want to catch the bottom, you need to try and find the top first. Is that like one of the golden rules?
Yes, because you want to find the correct angle. You want to, because we don't know how deep it will go. We don't know. So we have to use the top angle, decide this angle first, and then we clone it and move it around to see if it matches, right? So if we're using this angle, it means that there could be, it's not really a perfect timing for you to invest right now. We kind of want to wait until it drops over here, plus using the horizontal line. So just maybe, right? You can't see horizontal support. If this price drops down here, then I would say this is a stronger support than the one right here. But however, this one is still support. It's still support, but this support is just stronger. Okay, there can be diagonal support in diagonal support. So now once you have kind of decided the angle, you want to move this line, clone it, and move it around to see if there are other diagonal supports inside. So let's see. Okay, so just maybe, right? Just maybe, it's not very clear. You can see top, high right here, low right here. There's a kind of a low right here. So you can see it's not very clear. So let's move it around over here. Now this one's a little bit clearer, so you can see a diagonal support in a diagonal support, 1 dot right here, 2 dots right here, a low point right here. So yeah, so if you go and clone this again, I would say if you move this around here, I would say this is it's not the best time for you to buy big. Okay, you want to maybe invest in like 10 or 20%, right? You don't want to miss out on the drop. You don't know if it's going to drop more, but you kind of see this is like a weaker support, but still you can invest in a little bit. in a little bit, and it explains why the price, rebounded down here, went back up, and then still hovering around here. Okay. So so you can still buy a little bit. Okay, but what you don't want to do is you don't want to buy in the middle right here when there's not touching it, when it's not touching any support or resistance. Okay, this is super powerful. With just a diagonal and a horizontal support, you can actually you can try to catch the bottom already. Okay, and on to the second indicator. Okay, what's this? Okay, yeah. So if you know how to determine the, sorry, let me share my screen. So yeah, if you know how to determine the intrinsic value, right, then you know when something is below intrinsic value, you can try to catch the bottom with the TA. Okay. Now, exponential moving average. Now, let me explain this a little bit. And the exponential, I know a lot of people use it like 5 day, 10 day, 20 days, 50 days, and 200 days. But if you really want to be super duper safe, strongly recommend only use the 200 and the 100 or 200. Now, with this moving average, some people are saying so there's trend investing, there's buying the dip investing. So some people are saying that when it moves above the moving average, you buy it. Then when it moves below the moving average, you close it. Okay, so some people do say it that way, which is I understand why. With the value investing method, we're trying to do it a different way because we're buying valuable items at a cheaper price. So the concept behind this is that we're not doing trend investing. That's different. So when you see an iPhone and for 300, for the whole year, the iPhone is selling at $1,000, right? So that's that's the average price. When for some reason there was a big discount on the iPhone, it drops the price to $800 or $500. That's the time for you to buy. Okay, so now this is a little bit different than trend investing. And I'll show you why. So we want to buy this on mainly if you use this on stocks is better. We want to buy valuable items when they are cheaper, like an iPhone or a house, right? So if you think about the housing price, you kind of, following the trend is something that now I do agree to it with a certain point, but if you're able to purchase it with a very low price, you reduce your risk and you get a higher percentage return, right? So using the exponential moving average is either buy it when it's very close to 200 moving EMA, or either buy it when it's below 200 EMA. So let me explain. So let's go ahead and let's clear all the drawings. And let me explain right here, remove drawings. Okay, so go here, click on indicator and strategies and type in EMA, exponential moving average. Now we're gonna just only use two. We're gonna use the 100 and 200. So I'm gonna add this again and then adjust this to the length to 100 because I want to be really safe. I don't want to bet on the 5 day or like the 10 day or something, right? So I want to go for the safest one. I want the 200, and I also want the 100. All right, so let's do that. And I'll explain why the 100 and 200 is the one that I use the most common use. Okay, so if you look at the NASDAQ 100 QQ, you can see that it's the blue line. This one is the 100 one. It's the 100 one. So when you look at this and based on right here, if you had the horizontal support right here and the diagonal trend line somewhere around here, right? No, okay, I'm just gonna remove that. It's gonna make the drawing very messy. So you can see that when it's touching this this blue line, the 100 one for the QQQ, you can see very nice big trend right here. It's like touching the bottom. So use the 100 one. Now also when you see this drop right here, don't panic. Okay, so with stocks, you don't even panic because you can read the financial reports and know the intrinsic value. So you can see this one when the during the crash in March last year, it touched the 200 one. You buy it, it went back up, it went below. Don't panic, okay? Don't panic below. Don't sell it at the bottom. You lose a lot of capital. You should add more if you're buying index fund, okay? So you can use the 100 and 200 to really help you try to get the bottom, plus using the horizontal and diagonal support right here. Let's go and check the S&P 500. The S&P 500, you see the 100 one, that's a blue one right here. 100 is very, very good, very nice and smooth. One time, two times, you kind of missed this one. You got this one, and right now it's coming down. So, we'll see, because panic, we'll see if this, will keep coming down to touch the horizontal support, diagonal support, and touching the 100 EMA. Okay, it could have another sharp drop to break this diagonal support, break all the way back down to this 200 one, which is right here with this horizontal support, 1 dot and 3 dots, 1, 2 dots right here. So it still could happen. Okay. So let's look at Dow Jones. Dow Jones, you can see you have the 200 one right here, and then you have the 100 one right here. So 100 and 200, I would say it's the safest one, because it's like if you catch it 1 or 2 times, you don't really need to worry about it. Now Ethereum could be a little bit different. But you can still see 201, right? 201 right here, 201 somewhere around here, buying below the average price and then going back up. And right now it's hovering right here. So 100 and 200. Okay, so I'll go and practice on the 100 and 200. The concept is that I want to be safe. I don't want to use the 5, 10, or 20 days ones, because I want to really go and try to hit the bottom. Okay, go and practice that. Move on. Let's move on. All right, so the next indicator, let me share my screen. All right, so that's the EMA. Now, right, EMA is kind of useful. I mean, if you know the intrinsic value, you can buy below the intrinsic value, but buy below the average price. Now, trading value. Now, when the trading value is very, very important, is because we kind of want to know, when you see high trading value that's abnormal, it means that people are panicking. So according to Warren Buffett's quote, we want to buy when people are panicking. That's the best time. That's 100% the best time. Okay, cool, good. Samuel's back. Good. Okay, good. So trading volume is super duper important, because we want to buy when people are panicking. So okay, so this is from Ray Dalio. He's a very famous investor. He said, when the COVID hit, right? When the COVID hit, the tissue paper, toilet paper price shot all the way up. Right? People couldn't get toilet tissue papers. He knew that there was going to be a drop soon, because that was panic buying. So when people knew that, when they don't need that much toilet paper, and they're quickly selling all the toilet paper stuff, causing the price to drop all the way to the bottom. And that's the best time for you to buy the toilet paper, right? Same with Ethereum. Think about the Ethereum drop in May. Ethereum, everything is like crypto world, everything's built on Ethereum right now. Think about the value of the Ethereum. People were just panicking. They were selling Ethereums for no reason. The NFT is still going on. Transactions are still being made on the Ethereum chain. There is a lot of Ethereum blockchains going on. So when people panic, that's the time for you to buy. So let's look at the trading value. So let's go back and look at. I'm going to use stock and then move on to crypto. So I'm going to remove all the drawings. Okay, and then you click on this indicator and strategy. We're going to look on just volume, very, very simple. Click on volume, and then we're going to move this volume to a chart. Move to a new panel below. Okay, so let's see what happens. So during the drop last year, right? You can see the abnormal of this trading volume. So whenever you see a high trading volume, it means that people are panicking. Same with this. I think there was a trade war going on. There was another stuff right here. I can't remember what it is. So yeah, so especially when during the housing bubble right here, super duper high trading value, right? So that's the best time. And if you look at this trading value, you can actually say this is when people, are panicking and selling their stocks. Whenever there's a high trading volume, this means that, most people have gotten out of the market already. And then what would happen is when no one is selling the stocks or the cryptocurrencies anymore, the stock price or the price will start to hover around that point. And then, it's the best time for you to buy. So if you look at this 1-year chart right here, you can see whenever there is a panic, right here, you compare the trading volume to the previous trading volumes, and you try to distinguish if there was a compared to itself, right? So this is the S&P 500. So this was a pretty good trading volume right here. There was a good one right here. There was another good one right here. So it's all indicating that people are panicking. So same over here. This was the Ethereum drop right here. So, a lot of people has gotten out of the market already. People are super duper afraid. They're panicking. People were panicking and super duper afraid. And you can see this horizontal support right here. A lot of people have done getting out of the market right here. So what does this mean? So this means that the price will start to hover around here because there are no more sellers. When there are no more sellers, then the price will start to hover and have a higher chance for it to go back up. So that was the Bitcoin. This was the Ethereum. I'm going to remove the indicate. Move the drawings. Move drawings, and you can see the price was hovering somewhere around here. So yeah, so this is the trading volume, the use of the trading volume. If you see a drop plus a high trading volume, this means that, it could be like, well, very likely to be a panic. And when the panic is over, no more sellers are going to sell. Therefore, the price could go back up or hover around here. Okay. It will be very clear when we combine all the indicators together at the very end. Okay, this is an easy one, so I hope everyone could go and practice and add me third indicator. Okay, cool. All right, so now, so this is what Warren Buffett said. We want to buy we want to buy when people are panicking. We want to buy valuable items when people are really panicking. Okay, next one. So yeah, so this is this is the Visa right now. I'll explain Visa later. Visa, there's a okay. Everyone, I want you to just like watch Visa. So don't have to invest in Visa if you don't know what Visa is doing. But basically, Visa is your credit card and bank card, debit card company. So you can see this high trading value right here. Let me explain. So super duper high trading value. This trading value surpasses the COVID trading value. And I totally think this is the joke, because like, if you know how to read financial reports of Visa, everyone's using their credit card. If you're not using your credit card, you're using a bank card, your debit card has Visa on it. And people are 100%, they're panicking right now to sell their Visa shares. And this trading value is higher than the COVID panic, which is, it's ridiculous because there's nothing wrong with the company. So this is, to me, it's a good time to buy Visa. And I know how to do the intrinsic value calculation. All right, so we want to see high trading value. We want to know when people are panicking. When people are panicking, they lose their rationality. Okay, now number 4, stochastic. This is the very, very famous indicator. I would probably say it's better than the RSI because RSI only has one line and this one has 2 lines. So this is the stochastic oscillator. Basically, if you're doing trading, you would want to buy and you want to be safe. You can sell it around here. So, but now there are some things that I want you to adjust. So go over here. yeah. Leslie, I bought so many Visa shares. Like people are just like, oh man, people are just panicking. All right. Yeah. So we're gonna go into super rare Visa have exactly. Yes, yes. I agree. I've been waiting for Visa to go on sale forever, and right now it's a super big sale. Okay. Right. So now stochastics. Now, so go into f of x and type in stochastic right here. Stochastic. And then I want you to adjust preference. Yep, very good. Black Friday sales and Cyber Monday. So yeah, I actually think that Monday is going to drop again. So I'll go shopping on Monday. Okay, so now the oscillator or stochastic. I want you to change this. Go to settings, change the inputs to 3. Okay, change the inputs to 3. Now so this is not very smooth. It's not very smooth, but if you once you change it to 3, it will become smoother. And then also I want you to change the upper band and lower band to the extreme, which is 95 and 05. Now, why do I want to do this? Is because I want to be super duper safe, and also when you are super duper safe, you gain more returns. Okay, so it has a higher chance for you to catch the bottom. Okay, so I will combine everything together later on. So I'm just going to use this only indicator to explain. So this is a very, very simple indicator, right? So there is a blue line and there is a red line. Now the blue line moves faster than the red line. So when you see this blue line still going down, this means that you haven't seen a reversal pattern yet. What you want to do is you want to see the blue line when this flips, when the blue line crosses over the red line right here. This means that there's indication that a downtrend could happen. There's a higher chance for the downtrend to happen. When you see this price hovering around here, there's not a very good indication that the blue line is going down. This is I would say, like, if you want to be safe, you can still sell it. You can still sell it because if you sell it here, price comes back down to here. So you miss out on this growth, but you can catch it at here. Now, but when we want to catch the bottom, we want to be really, really safe, and we want to see is when stock price crashes. We want to see this becoming really, really close to the bottom, which is 10-15 right here. You don't want to buy here. You don't want to buy here. You want to buy it when it's very, very close to bottom, because it's less risky, less capital, higher chance for you to go back up, right? So this one may be okay, but these two would have been a better chance. Now, just want to remember, so you can see with this being low, it can still go lower. Okay, with this being low, right, there's a good chance to buy. If you're doing trading, right, you can get in here, get out here, get in here. When it goes up here, you can get out. If you're doing trading, yeah, so this is a very, very useful indicator. Now, let's go and look at Ethereum right now. So Ethereum right now, you can see that Ethereum, the blue line is still going down, remember? So this is the fourth indicator. So based on the horizontal diagonal support, based on trading value, based on stochastic, it's still saying that there's room for it to go down more. And plus this COVID variant stuff, right now, I would probably say if you can buy only a little bit, just don't buy too much, right? Lower band. Okay, so lower band is 95 and 5, because I want to be super duper safe. Lower 95 and 5. Okay, so as you can see, when you really become super duper safe, right? You can see, whoa, this is a super good one. So let's say if you look at this, you didn't buy here, you were a little bit skeptical, you're waiting for it, and then you see this, man, super good chance, super low stochastic. You see the horizontal support, you buy it, it shoots up. Right? You didn't buy anything here, wait for super low stochastic, you buy it, plus the horizontal support, Ethereum shoots back up. And let's look at some stock indices. So the Nasdaq 100, the QQQ, so the QQQ is it's pretty volatile. So but it has higher growth. So you can see low stochastic right here, super low stochastic right here, and then remember there was a horizontal support right here. I think it was like somewhere around here, right? Somewhere around here, I think. Yeah, okay. So yeah, so when you see this right here, super low stochastic, horizontal and diagonal support, best time for you to buy. Best time for you to buy. Same here, horizontal and diagonal support, super low stochastic, best time for you to buy. And then this is okay, so this one, this one is like, it wasn't really touching the horizontal support. Well, it's touching this one right here. Like there's a small one right here, but stochastic is good enough. So you can still buy it, go back up, and now you can see the price coming back down. Not touching anything right now, so not the best time for you to buy. You want to touch either horizontal or a low stochastic or a diagonal support. So same with Ethereum. Ethereum right now, it's only touching the horizontal line. It's not even touching the diagonal support, right? So diagonal support, maybe I'm trying to get this one, clone it, move it down here. You can see it's not touching the big one, the big trend right here. And also stochastic is going down. And also if you add in the trading volume, you can see that not a lot of people are panicking right now. So where is it? Okay, I'm moving this to the, move it to the new panel below. Oops. New panel below, okay, right here. So you can see, the trading volume isn't even really high. So based on, the 4 indicator, it's saying that it's not the best time for you to bet big. It's not the best, but if you see this one right here, right? If you see this one right here, this one would have been a good time, right? Horizontal support, diagonal support, kind of low stochastic, and a little bit high trading value. This is a good time to buy. Okay, so everyone go and set the stochastic. And now we'll talk about the last one. So this is the Visa intrinsic value. Okay, so Visa is a joke. I buy a lot of Visa. Yeah, so that's Visa. And so that's the combination of the the trading volume, the stochastic, horizontal, diagonal support. There is a horizontal support around here. There's one right here. There's 1 dot, 2 dots. Okay, it's not the best time. It could still drop to 180. So I have some call options or put options at 180. So with the 180, you can see 1 dot, 2 dots, 3 dots, and if it does come down all the way to 180. That's super duper strong buying point, super duper strong. Horizontal, diagonal, trading volume, and stochastic if it does come down. Okay, now any questions? All right, no questions then.
Sorry, Ken, for the stochastic, what is the settings again? Because mine seems to look a little bit different. Mine is K is at 3, D is at 1, and smooth is at 3.
Yeah. Okay. Cool. So K14, sorry, K length is 14, K smoothing is 3, D smoothing is 3.
So it's 14, 3 by 3.
Yep, correct. Yep.
Okay. All right. Now it looks similar to yours. Thank you.
Yeah. Oh, good. Oh, good. Okay. All right. So let's move on to the 5th one. Now, the 5th one is literally the best tool ever, and no one really talks about this tool because people just think it's too complicated, but I really think it's the best tool ever. So this is called the Fibonacci retracement, and this can be used to predict where a rebound could happen. Also, it could be used to predict a drop. So let me show you guys. So for Fibonacci retracement, so what you want to do is you want to go to the, let's see, here, over here, click this line over here, click on Fibonacci retracement. Okay, so you want to do is you want to, okay, I'm going to remove the other drawings first. Move drawings indicators. You want to pull a line from the top to, you can use any bottoms, okay? You can use any bottoms, but when you see a big trend, you want to pull it all the way to the bottom right here. Now, let me explain this tool. This tool is used to help you predict where a drop could happen. I mean, a rebound could happen. Now, the settings right here, there should be another setting. Right click on it, go to settings. Now, I want you to disable this 0.51. The 0.51 is okay, but don't use it for now. I'll show you why later. Okay, the 0.5 is okay, but don't use it for now. Now, let's say, you kind of want to predict when the market is going to, rebound, right? So what you want to do is, let's say if you kind of see a correction right here, you see the stock price drop, and you kind of want to predict when the stock price is going to rebound. then you can look at this Fibonacci retracement tool and saying that the prices have a higher chance to rebound at these 4 levels. When it goes down deeper and deeper, the stronger the support it gets. So if you look at this, this is the NASDAQ 100 QQ. You see kind of hovered around here, It broke, and then after that, it broke the the one right here. It went to the blue one right here, rebounded back to this this one right here, which is the previous high right here. Went back up, rebounded again, it broke it, and then it didn't touch anything right here. It broke it, and then it went all the way up. So what you want to do is, okay, so listen carefully. So when it breaks, when it breaks into the new high zone right here, what you want to do is you want to move this up a little bit. So once you move this up a little bit, you can kind of predict when the next drop is going to happen. So you can see I'm trying to predict a bottom. So there's a pretty good bottom right here, and then move it up, and then you can see rebounded at the blue price right here. So when you want to catch the bottom right here, you can move this up to somewhere right here. So now, but okay, so stay with me. If you kind of feel like, oh, it's not touching anything, right? Move this bottom right here. Now this bottom can be remember to use the bottom, so it can be like somewhere around here. So when you move this to this bottom right here, you can see now this has become clear again. Drop to this Fibonacci retracement blue zone right here, it goes back up, right? And then if you want to catch the bottom again, you can, right now it's kind of dropping, but you kind of want to, you can see how if it does drop to the blue zone right here, then it's an indication that it's a good chance for you to buy. Okay, now I'm going to use it on Ethereum, because I know most of you are crypto traders. So look at this Ethereum. Now this was a super good indication right here. So if we combine all the indicators together with trading volume, with stochastic. So stochastic, I'm going to change the K smoothing to 3. And then I'm going to change the bands to 95 and 5 right here. And then I'm going to move the trading volume. I'm going to move to new panel below. Okay, so you can see the horizontal support right here. Now, once you use the Fibonacci retracement tool, everything will become clear. So if you look at, so that was the top, right? That was the top, and you try to catch a bottom right here. You can see how nicely and perfectly it fits at this yellow line. So, if you bought it here, it'd be great. You have the horizontal support, you have the stochastic, you have the Fibonacci retracement tool at the yellow zone right here. So it's super duper useful to catch the bottom. Now, once you see this coming, right, this drop coming, you want to move this to here, right? You move this top, you want to try to catch the bottom again. You can see it hover around here. And then what you can also do is you can use this bottom as the bottom, So you can see right here, it kind of rebounded over here, and then it kind of rebounded around here. It's not perfect, but it will give you a brief idea. So if you have use it with stochastic and use it with trading volume, then it will be better. So let me show you another example of Bitcoin. Like right now, use Fibonacci retracement, pull from the top there are 2 bottoms where you can choose. It depends on which one fits the best. So a bigger trend would be better. So you can see right now it's touching the green zone right here, plus the horizontal support with 1 dot right here. Although so let's try to do the diagonal trend. Okay, let's see if there's diagonal trend. All right, so let's start from the top right here. Let's see. Okay, so you can see 1 dot, 2 dots, and 3 dots right here. Then you try to clone it and move it to see if you kind of see. Okay, so this is a good indication that this is a good buying point for Bitcoin. But there's one thing that you need to watch out, which is stochastic. It's still an indication that there is room for it to grow. But this blue line can just reverse on Monday and just shoot back up. Okay, this blue line can just be like, okay, I had enough of dropping already. No one is panicking. It could just reverse and go back up. Right now, the Fibonacci can also help you if you buy batch number 1 right here. What you can do is you can buy again according to the Fibonacci retracement levels. So the yellow zone will tell you right here, if you drop to the yellow zone, you can see maybe there's one support line right here. There's another support right here, but not perfect. So what you want to do is, maybe if you want to be safe, buy it right here, the red zone. There's one dot right here. There's 2 dots right here. So maybe if you want to wait for it to drop all the way down to the red zone. So the Fibonacci retracement tool helps you to determine your best buying point. So you don't buy in the middle, you wait. Okay, you wait. Yeah, so this is the Fibonacci retracement tool, and this is super duper useful. So just for example, right now, I kind of want to guess where the stock market is going to drop to, right? So I'm going to choose the top, which is the top right here. I can either, a longer trend is usually better. So if you use this bottom right here, you can see it's hovering around the blue point, but there is no horizontal support. So I'm going to keep on pulling, and I'm going to maybe use this one, just maybe, but I don't see anything fitting, not a good fitting yet. So I'm going to keep on pulling, maybe using this one. Okay, so this one, you can see this has a better fitting. There's a high right here to the low right here. So if this, if the NASDAQ 100 goes all the way down to the blue point right here, and according to the trading value and the stochastic, and at that time I will determine if I want to buy or not. And then the next buying point will be if it continues to go around here, right? And then another strong support is over here. If it continues to drop, you have 1, 2, 3, 4 very strong points right here, horizontal support. Okay. All right. Sorry, guys. All right. So this is like, this is super duper powerful tool, and yeah. So sometimes when you start, it could be a little bit confusing, but don't worry about it. Just make sure that when you're using the tool, you have, let's see, right click on it, go to settings, you have the 0.5 disabled, because I kind of don't want to buy in the middle. I want to buy, when it's very, very low, or like hitting it at 0.786, right? So make sure you also want to make sure you have 1.618 and 1.272. So these are the only numbers that you need. You don't need anything else. Sell close. Okay, so let me so we talk about buying and selling. So we're talking about, so basically you can see that we want to kind of sell it when the Fibonacci is tracing 1.272 or 1.618. Okay, so 1.618 is the stronger one. The 1.272 is the weaker one, but it's all fine. You can still sell, make some profits around these points. Now, high stochastic, definitely a good indication that you should probably sell. Now, fundamental goes wrong if you're talking about stocks, means that the intrinsic value keeps dropping. So for example, Nokia, for example, Yahoo, for example, Kodak, for example, IBM. So these once major tech companies, if you know about the intrinsic value drop, and then you can actually see that you probably should get rid of them as quickly as possible. Okay. Actually, should we take a break first? Yeah. So okay. So basically, this is a real example, because I'm actually more of a stock investor. So when the valuation is still good, then hold on. So this is one of my students. When look at the intrinsic value growth on these stocks, he held them for a year, and he got like pretty good returns. But he was a beginner, so he held like 11 shares of Visa, 2 VOs, not a lot of good, like big shares, right? But with the buying it at a low point and waiting for the intrinsic value growth, he can actually make a lot of good money. Not a lot of money, but good money, good enough. So if you're using on stocks, you wait for the intrinsic value to grow. You don't really need to. You catch the bottom with TA, then you know about valuation. Then you don't really need to sell the stocks because of intrinsic value growth.